Welcome back to your ultimate pit stop, Piston Pundit. Today we're not talking torque curves or horsepower dynos. We're diving into the mechanics of global trade and how it's stalling out on the world stage. Donald Trump has been parading historic trade deals as proof of American leverage, but one of his biggest showcases, a $350 billion commitment from South Korea, is skidding off the track. What was supposed to be a victory lap now looks more like an emergency pit stop. Let's break down the twists and turns of this high-stakes standoff. From historic handshake to harsh reality, doubts break the deal. The July handshake between Trump and South Korea's President Lee was framed as a historic win. U.S. tariffs on Korean goods would drop from 25% to 15% in exchange for a staggering $350 billion investment into American projects. Trump called it proof his tariffs forced allies to pay up. But Seoul quickly balked. Officials clarified the pledge wasn't cash in hand, but loans, guarantees, and equity. Trump's claim of upfront money rattled markets, with economists warning it could drain 84% of Korea's foreign reserves, far more punishing than Japan's similar pledge, which drew only 41% thanks to its stronger yen and swap lines. For Trump, this was political theater. For Seoul, it echoed the trauma of the 1997 Asian financial crisis, when debt crushed the economy and forced millions into hardship. Instead of a win-win, the deal sparked panic and political backlash, leaving Koreans feeling more like test subjects in Trump's pay-to-play diplomacy than trusted allies. But the funding terms were only the start. Seoul's biggest sticking point came in the form of a critical safety net. Currency swap showdown, Seoul demands Lifeline, Washington refuses. At the heart of Seoul's resistance is one critical demand, a dollar swap line with the U.S. Federal Reserve. This safety valve would let South Korea trade won for dollars directly, shielding markets from chaos if billions drained out. Without it, analysts warn the won could plunge past 1,450 per dollar, territory not seen since prior crises. President Lee Jae-myung insists the swap is essential, recalling 1997 when the won lost half its value, reserves collapsed, and South Korea was forced into a humiliating IMF bailout. No Korean leader wants to risk reliving that trauma. Washington, however, has balked. Treasury Secretary Scott Bessent offered vague assurances while Commerce Secretary Howard Lutnick bluntly told Seoul to follow Japan's example. But Japan's economy is larger, its reserves deeper, and the yen dominates global FX. The won barely holds 2%. With markets jittery, the currency already past 1,400, Seoul sees this swap not as bargaining leverage, but survival. Trump's refusal leaves Korea dangerously exposed. And while finance is fragile, the real firestorm is political, both in Seoul's parliament and in its streets. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Politics in overdrive. Public fury turns into national resistance. Domestic politics are amplifying Seoul's defiance. President Lee has warned that yielding to Trump's terms could spark impeachment, with opposition leaders branding the deal a surrender of sovereignty. In a country haunted by corruption scandals and past impeachments, Lee cannot appear to sacrifice national dignity for Washington's demands. Public fury only deepened after a U.S. raid in Georgia detained over 300 South Korean Hyundai battery plant workers. Images of shackled employees dominated Korean media, fueling outrage that their nation invests billions in America, yet sees its workers treated as expendable. Washington's apology did little to calm the storm. Meanwhile, Trump repeats his $350 billion upfront boast, ignoring Seoul's insistence on phased funding. The disconnect has bred mistrust at every level. Citizens also point to Korea's existing burden: higher defense contributions and hosting 28,500 U.S. troops. Economists warn the terms are irrational, arguing tariffs are safer than collapse. Together, politics, outrage, and humiliation make agreement nearly impossible without major U.S. concessions. Yet this fight isn't contained to domestic politics. It's spilling into the broader Indo-Pacific power struggle. Indo-Pacific Crossroads, strategic stakes in a fractured alliance. This dispute isn't only about tariffs, it's unfolding in a tense Indo-Pacific where alliances are constantly tested. As Washington presses Seoul for billions, South Korea faces an increasingly coordinated front of China, Russia, and North Korea. Kim Jong-un's appearance beside Putin and Xi at a Beijing parade underscored the region's tightening anti-US axis. For Seoul, economic stability is national defense. A weakened economy would sap leverage against Pyongyang and reduce autonomy in managing ties with Beijing. Accepting Trump's demands without safeguards risks binding Korea too tightly to Washington, eroding independence. Trump's transactional style, tying military cooperation to trade, further complicates matters. President Lee has drawn a line. Security ties endure, but trade must follow commercial logic. That stance departs from Korea's past tolerance of economic imbalance for military backing. If the deal collapses, tariffs will bite, leaving Korean firms less competitive than European or Japanese rivals. The ripple effects could shift trade flows, weaken Korea's industry, and reshape Indo-Pacific power dynamics. And as global markets react to every move, the road ahead looks increasingly uncertain. Markets on edge, the uncertain road ahead for Korea. The Korean won sliding past $1,400 per dollar rattled markets, signaling deeper risks. Analysts warn that if Trump's $350 billion upfront demand were enforced, the won could fall another 50 points annually, possibly hitting 1,450. A catastrophic blow for import-heavy firms and those with dollar debts. Wall Street isn't buying Trump's pitch either. His profit-sharing model, where Korea recovers equity only to surrender 90% of future profits, has been called commercially absurd. Economists argue Seoul is better off enduring tariffs than risking collapse under such terms. President Lee agrees, rejecting reckless gambles for short-term relief. Instead, Seoul has offered phased investments, financial institution loans, and commercially viable guarantees. Washington, however, has refused to budge. Now, all eyes turn to the APEC summit in Seoul, where Trump and Lee could either salvage the deal or cement its failure. For Trump, losing undermines his historic wins narrative. For Seoul, refusal preserves stability but risks trade friction. Ultimately, markets may deliver the final verdict. And that brings us to the critical question, whether this historic deal is salvageable at all. Verdict: a deal too costly to seal, or survival first? What was once touted as a $350 billion historic win now hangs by a thread. For Trump, it was meant to prove U.S. leverage. For Seoul, it promised tariff relief. Instead, mistrust, public outrage, and market fears have left the deal on life support. South Korean leaders see echoes of the 1997 crisis. Without a currency swap, Trump's terms risk destabilizing their economy for uncertain returns. For Seoul, survival outweighs symbolism. For Trump, tariffs remain his pressure tool, but allies are no longer automatic followers. As the APEC summit nears, the world watches. Will there be compromise, or a decisive walkaway that reshapes U.S.-Asia relations? Before you go, what do you think? Should Seoul hold its ground even if tariffs bite? Is Trump's deal-first strategy strengthening or weakening alliances? Could this standoff shift trade power toward Japan and Europe? Drop your thoughts in the comments. Don't forget to hit that subscribe button and ring the bell so you never miss the latest updates and deep dives on the automotive world and the forces shaping it. Thanks for watching, and see you in the next video. You can now check out any of the videos on the screen. There's plenty more to explore.